Um, Good evening, everybody. Welcome to the panel discussion on startup boom during the pandemic. What has changed and how is it evolving? So first of all, I want to say I am really excited to be here, especially in a physical conference. And to me, that means, and hopefully we are at the beginning of end of the pandemic. While we've been as a nation and across the world, we've been going through a pandemic, and we are still, we are still within the pandemic, right? The startup ecosystem in India has been going through some exciting times. We had 36, 37 unicorns in this 1 year, which is probably the largest and second largest in all of the world. A lot of, large IPOs, large tech IPOs, a lot of large secondary exits. So overall, we are going through very, very exciting phase of our startup ecosystem. Now we have an absolutely amazing panel today with us. It's a combination of venture capitalists with, decades of investing experience in India, as well as entrepreneurs who scale their companies to unicorns and decacons. So we want to, talk to them to understand how the ecosystem has evolved over last 10 years or so, and also, how has the pandemic changed some of those trends, positively or negatively, and how is the ecosystem being impacted? So before we get into the discussion, I want to start with a quick introduction. I'll start with Rahul Chandra. Rahul is managing director of Arkam Ventures, which is an early stage fund that invests in companies that target the middle India, as he calls. In fact, Rahul is one of the earliest VCs, tech VCs in India. He started investing in '98 from Walden International in Indian market, went to Silicon Valley, came back in 2005 to co-found Helion Ventures, which has been one of the marquee funds in India and one of the early funds in India. Rahul is also an author. He wrote The Moonshot Game, Adventures of an Indian VC, a highly recommended read if you want to understand the workings of Indian or any venture capitalists. Welcome, Rahul. Rahul, you seem to be on mute.
Yeah, no, thank you, Rajesh. Thanks for the intro. Pleasure to be here. Thanks for inviting.
Thanks, Rahul, again. Dr. Srikant Sundarrajan. So Dr. Srikant Sundarrajan has, within this panel, brings a unique mix of both VC and entrepreneur experience, having been on both sides multiple times successfully. So Srikant is a partner at Ventureast. Prior to that, he held technology leadership positions at some of the large technology companies like Persistent, Cognizant, HCL, helped them scale. Prior to that, he built his own startup, which was acquired by BEA Systems in Silicon Valley in 2001. Srikant also holds multiple patents and teaches at Virginia Tech and IIT Bhubaneswar and is a great thought leader. Welcome, Srikant. Ravi Saraogi. Now we have the entrepreneur side. So Ravi is co-founder and president APAC at Uniphore Systems. Uniphore has been, Uniphore is the leader in conversational AI and automation and has been scaling extremely fast. Uniphore raised about $200 million in last couple of years and is slated to be a decacon in next few years. Ravi is currently an active member of the Mobile Payment Forum of India, where he identifies and develops business opportunities in field of mobile payments as well, in addition to helping scale Uniphore. Welcome, Ravi.
Thanks, Rajesh. Good to see you.
So Alok Bansal. Alok Bansal is the co-founder for PB Fintech, the holding company for Policy Bazaar and Paisa Bazaar. And if you are, I'm sure you know that Policy Bazaar did an IPO a couple of weeks back and a massive IPO, $7 billion or so. So Alok leads the investor relations, finance and legal, FP&A and HR functions for the group. He has recently led the company to a very successful public listing and is now setting up the corporate development function for the company. Now, unfortunately, Alok was not able to join us, but we have a recording. He's been kind enough to give, we had a brief chat and we had a recording. So I know we took a little bit time in introducing the panelists. It's again, a great set of panel. So I want to now start with the discussion. Rahul, I would love to start with you as one of the earliest capitalists in India. You know, you came back in 2005 to set up Helium here. And I've read your book. It's very interesting read for somebody who wants to understand the working of a VC. Now, you know, would like to understand your perspective on how the ecosystem has changed over the last 10, 15 years in terms of both from investor as well as founder, but also from an LP standpoint, right? Because that's kind of the other side that you're dealing with in terms of how are the LPs viewing India as a market? How has that perception changed over the last 10 years? It would be really great to know your thoughts.
Sure, Rajesh. Thanks and good evening, everyone. Pleasure to be here. I'm audible, Rajesh?
Yes.
Okay. Yeah, so I had the good fortune to actually get into VC in '97 with a US fund called Walden. It was early days where most people did not know what VC was. Went to the Valley, came back, co-founded Helion in 2006. And 2006 was beginning of, the first boom years. What changed in that first wave really was the kind of limited partners that looked to back Indian VC. And the read was that India is almost parallel with China in terms of the VC boom. The ingredients for India was a very high number of service companies and hence engineering skills. China was more towards hardware, but they both looked equally promising. So a lot of, at that time, primarily US LPs decided to back multiple funds. So that first gen of funds, really, everybody came around at the same time. So Helion, Nexus, Matrix, Lightspeed, all within a year or two apart from each other. The nature of the founders at that time really was people who were leaving corporate jobs because they were such exceptional performers, did not want to move out of India, but they were at the highest rung in their organization, had a nest egg, probably had paid off their EMIs, and they were generally lower risk takers, but they were domain specialists typically. So on the minority side, there would be few, people with very little experience, very little domain, also entering the founder group. What has happened now is that profile has totally changed. So it is obviously much younger. Sub 30 is the norm for 99% of our founder base. Most of them are, able to survive for many years without paychecks and with very minimal salary. The risk-taking capability has undergone a massive shift. Obviously, what used to be a million count for us has become a billion count now. So our exit outcomes for many of our investments in that period was in sub 100, 200 million. And now when we make a use business case for an investment, it's usually a billion or 2 billion. So it's a massive shift. And as we are all seeing that, there were probably 50 to maybe less than 50 angel investors at that time. And now there are about 8 to 10,000. Family offices have joined in a big way. So the sources of capital have, gone up multiple fold. The number of deals, etc., of course, as a result has also gone up. So we are now actually sitting in 2021 in a very, very different world. We'll come later to what's happened this year, Rajesh, but just to give a snapshot of 2006 versus 2020, we are in a highly active LP world where a lot of investors have joined in from family offices and actually successful entrepreneurs like you who have started investing. And of course, there are a lot more venture funds that have come into the market. So things are looking like they've never been as hot as it is right now.
Great. Thanks, Rahul, for your experience. Like you said, it's been a great change in the ecosystem. Coming from an entrepreneur's view, Ravi, as a founder who founded the company pre-2010 when access to capital was limited, raised to a Series A in 2015, but then, you guys went on to scale massively, raise $200+ million in last few years. And you also built a great deep tech company to scale, which is pretty amazing. I mean, we don't see a lot of those in India yet, right? So Ravi, would really love to hear your experience in terms of as a founder, how has the shift been from the early days when you're trying to raise funds and build the company versus, fast forward now, what are some of the trends that you were seeing?
Thanks, Rajesh, and thanks for having me on the panel discussion today. Good evening to everyone. Multiple things, Rajesh. It has not been a small journey. Our journey has been for more than 14 and a half years now, right? And we are equally excited as we were 14 years back as of now as well. When we started Uniphore, Rajesh, the whole startup ecosystem was largely synonymous with the surname of Bansals. Beyond that, it was one or two other individuals that you would find, but that was the startup ecosystem, so to say. When we started Uniphore, and again in the deep tech space, in a space where technologies like speech and AI and machine learning, all of that were involved, and working with large enterprises. Our business is not B2C, but a B2B. It was incredibly tough because of the challenges around technology itself, the market readiness, and the overall support from the overall ecosystem was very, very limited. In fact, Uniphore ran as a services organization in the same technology area, but as a services organization until 2014-15. And post which we did a pivot. So about 7 years after starting the company, we did a pivot. Use cases, adoption curve, etc., across large enterprises. That's the time we pivoted, and our investors were extremely supportive. We got investments from Chirate and then a lot of angels, Indian Angel Network, etc., extremely supportive in enabling us with that pivot, which really set us up in a growth trajectory. So that was then, and then post pivot, as you rightly mentioned, we expanded our business from a product company to a SaaS-based product company, to an India-only organization, to a global organization today present in 15 countries. And a lot of enablement of that particular strategy happened because of the maturity of the startup ecosystem within India itself. So if I have to break this up into two different zones, the maturity, I'll put three inflection points, right? The inflection point one would be the overall availability of the investor community pre-2013-14 era and a post-13-14 era. The second inflection point was the overall mindset of young entrepreneurs to come and start their own companies and take more risk, etc. And that really invigorated the entire ecosystem in a bigger way. More startups, more investors, more funding, and that cycle started at that point in time. And the third, I would say, the overall inflection point around the availability and enablement of the entire technology space itself, the availability of cloud, no code, low code enablement, AI, machine learning tool sets, etc. Today, for a young founder, one does not need to have a brigade of engineers. One can just pick up tool sets and build an entire solution around multiple different tool sets coming together. So it has evolved, in my opinion, almost completely, right? And that has really changed, in my opinion, for entrepreneurs across the industry.
Sure. Thanks, Ravi. And I think a couple of things, right? One, that I heard that you transitioned from a services organization to a product organization successfully, which is congratulations. I think it's not easy. A lot of people have tried that, and it's amazing. And it's amazing to see that you guys have scaled significantly beyond after that. I mean, it's really amazing. the other point that you mentioned, which is very valid, which Alok also mentioned, is that today the acceptance is, way higher. It is all right to be an entrepreneur. In fact, it's accepted to be an entrepreneur. And I was talking to Alok and telling him that even in a smaller town like Kochi today, smaller city, one of the tier 2 cities like Kochi, there's a lot of, focus on entrepreneurship. So that's really a great evolution on entrepreneurship. Now,
and Rajesh, sorry to interrupt, but one more point there, that it is also acceptable to fail as a startup founder, which was extremely painful back in 2013, 14, 15 timeframe. People will not even communicate that they have started a company on their own. Vis-a-vis now, if you go ahead and put across your resume and say that I started something, it did not succeed, but I want to do something again, it is acceptable, which is very, very different.
True. Thanks, Ravi. Srikant, so I want to pose the same question to you, but in a little bit more of a larger time frame. You've been investing and building companies for last 30 years, both in the US and Silicon Valley and in India. So you've seen multiple cycles. You've seen how the Indian ecosystem is evolving, but you also seen how the US ecosystem has evolved. So would like to hear some thoughts around that, as well as, and maybe also sort of understand your views on the pandemic, given that you've probably seen a number of black swan events like these, right? Like 9/11 and 2008 crisis and all of that. How do you look at this continuum?
Yeah, so let me break it up again into phases so that you have some idea. Actually, I did my first startup in 1991. I think quite a few people in the audience may have been very, very young at that point, or some might be as old as I. But it was in the Valley. And during that time, surprisingly, the US venture ecosystem was much more hardware product biased. And it was about 20 years old, approximately, the US venture system. So things were evolving. So if I was doing something in software, it didn't have immediate appeal. I mean, there were a lot of bootstrap stories. There was some funding, but I had no clue. And I bootstrapped my way to about $10 million in revenue from 1991 to 95 before things started to open up. And what really was the tipping point there was essentially internet opened up. New language stacks came up. And I have a PhD and my training is in AI and machine learning, right? And I still didn't find any use for it. So I went back to basic algos, and that's basically the first startup. It was basically a precursor to Appalachian. And it took a long time, as Ravi was saying, to try to explain what the value of a company like this was in the whole DevOps space, because people are not even aware of what it means to actually kind of build and deploy proper software. If you were to ask that question to yourself today, everyone knows it, or pretty much everyone knows it, and they've actually specialized. So then once we got funding, that's when I realized, okay, there is a reason to get funding. It's not just to show that you've achieved something, you have to kind of scale. And that took about 6 months for me to realize that you got to spend money to grow. So a lot of things, even from an entrepreneurial perspective inside me, how to deal with these things in terms of cash flow management, how to scale it. And we were lucky, we went through the .com bust, you might call it, and eventually got picked up by BEA, which was actually a good acquisition, maybe not from a price standpoint, but it was very aligned for all the team members and the product direction, which was the most important thing at that point. Then, of course, after that, I spent a number of years in services companies, like being the CTO at HCL Technologies, CTO at Cognizant. So I wanted to see what the services side was actually doing. And at that particular point in time, disappointingly, it was not doing much. Okay. And so I did another product company, and this was based on what Ravi was saying. How can you actually build fast? It might fail. How do you build fast? It was in the fintech space, away from my systems background. And we did a few things smartly, where we got capital from outside, and we had customers outside already who had prepaid for certain things. Otherwise, it would not have succeeded, right? If I had done a serial thing like what Uniphore was doing, or for example, Saskin is another great example of a services product. Kind of, they went back and forth, went IPO, you know that, Tejas Networks. I mean, there were a few. It's not just the Bansals. There were very good companies, okay? And but the struggle was there in terms of if you're in the B2B space, if you're in deep tech space, it's going to be much more difficult. At the same time, we started to see VCs come into play. As Rahul was saying, 2006 was a watershed year. 2006, 2008. I think Ventureast was on its second fund. Okay, I had the good fortune to work both for Ventureast as well as Helion for a while, but Helion in its third fund, not the first fund. So Rahul has a better perspective. But what I was seeing was people were getting a little bit more open in terms of coming up with business ideas. Maybe the initial non-deep tech plays were all a little bit of emulation of what was happening in the US, which was obviously the right thing. And then what happened was around 2008 to 2010, the biggest inflection point happened. Cloud became a reality from a technology perspective, and all the components that Ravi talked about became available easily. If you talked to me in 1991, I would have written you an algorithm, but I would have written the algorithm for you. In 2010, these were available, and it's become more and more easy to build things, right? And then the mobile revolution. If you bring these three together, India was right. And then there was this phase as Ravi and I forget who else. There was another gentleman who was, that name will come back to me. But the 2010 to 2014 was all about build out and show some traction. So you'll see that the valuations were not crazily out of bound. Maybe there were a few, but things were progressing slowly. But I think around 2015 is when people realized there is huge potential. There is a talented workforce, because by that time, all the MNC software companies had established beachheads here, and a lot of good people were coming out. And younger people graduating were starting to get excited by this whole startup culture. And Bangalore is a great environment because it's as good as Silicon Valley as far as I'm concerned, when I was there in the early 1990s through 2000, right? So I think all of this is adding up to what I see as a very bright next 10 years. You said last 10 years. I'm more focused on the next 10 years. Okay. Now there are a few blips, as you said, right? Okay. I have seen the recession in 1991. Okay. I've seen the dot-com bust. I've seen that financial meltdown in 2008, which probably even Rahul has seen it. I think early days of when they set up the first fund, because it was all over the map. You've seen the evolution of the LPs, the LP confidence growing in India. China, in a way, is a white swan event for India right now, because you will actually see a lot more interest in India. So all these things are adding up to something really good. The government policies have also opened up. I'm not saying it's opened up really well. There's lots of room for improvement, and hopefully the Honorable Minister, if he's still here or he's not left, I think he should take heed that a lot more has to be done, because I still feel very early stage startups, before they can attract institutional capital, need a lot of help and need a lot of guidance. And it's not being done as well. So when you talk about, say, COVID in particular, which you wanted to say, what are the black swan events? As an entrepreneur and as an investor, we have to be prepared for the goods and the bads, right? And if I look at the most recent event, which is COVID, what was pleasantly surprising was the resilience of the entrepreneurs in basically saying, listen, these are tough times, I'm going to do whatever. The second thing is, sometimes it's called luck, sometimes it's called clairvoyance, sometimes it's called a whole bunch of different things, right? Any digital business actually started to benefit because people or the buyers or the businesses started realizing that, hey, I can't just be offline. This is a hybrid world. It is going there. And that led to a whole bunch of exciting companies which have come out. I mean, I can talk about some startups from IITs like Infinite Uptime, Dozy. These are all on the edge microprocessor plays. I can talk about Cron.ai. I can talk about Equinox. I can talk about morphing engines. These are things which I would not have thought about in 2010, because fundamentally, I'm more of a tech guy and an entrepreneur, less of a broad investor. If I like something which is a B2B product, that is what my interest is. And I'm seeing a whole bunch of things that happen. And I'm seeing a lot more. Okay, so I think they're very bright times, the next 10 years. And it's great for people graduating. They're great careers. I always encourage people to go work for one of these exciting startups for 2 years before you branch out, because when you just try something new, it's a difficult thing. But all of this is there in place right now, except a little bit more refined help from the government. I hope that sums it up.
Thanks, Srikant, for your perspective, and to see that so many deep tech companies are coming out, and there's a whole lot of potential out there. Ravi, just kind of coming back to you, just switching gears a little bit on the pandemic, right? How has the pandemic been for you, in terms of impact to your business, and also, what's your thought on how the pandemic has impacted the ecosystem in general? What are your thoughts and what are you seeing?
So Rajesh, for Uniphore, as Srikant was mentioning, for any business which is focused on digital initiatives or bringing in digital transformation, it has been a great sort of time in a way, because organizations which are digitally enabled had a better reach to the consumers, and companies which were supporting large enterprises also in bringing the digital curve had an impact. And similarly, Uniphore with its products and platforms really support large enterprises to bring in digital transformation, especially in their customer service and contact center domain. And obviously that had a net positive impact on the overall business for Uniphore, as large enterprises had no other option but overnight get into a digital transformation curve almost immediately to support their end consumers, because as consumers, we did not have immediate option to go to a branch or to a physical store and get our issues sorted. We had only agents to make a phone call to resolve our queries, complaints, or requests. On the other hand, agents were pushed to work from home, and many of them did not have connectivity, physical setup. So the number of agents went down, the calls increased, and the only way to cater to that need was bringing in digital transformation. So from pandemic perspective, it worked in a net positive way for us. Now, obviously, it was not positive immediately, obviously. And with having board members like John Chambers and Andreas and Pankaj Patel, etc., really helps in such scenarios, because they have gone through, as Srikant mentioned, some of those black swan events in their past life, and getting some ideas on how to navigate the overall business through such black swan events really helped us a lot. One simple sort of quotation that comes to my mind is, it was said by one of the most successful CEOs in human history, Mr. Jack Welch of GE, where he mentioned that you look at a situation and feel victimized, or you can look at it and be excited about conquering the challenges and opportunities it presents. And I think every black swan event certainly presents an opportunity as well, along with the challenges. For some, if they pick up the challenges well and create opportunities out of it, it can enable them to be in the next league altogether as we move ahead of the curve. Now, during the pandemic, all the companies which were in our sort of domain or in the similar domain bringing in digital transformation had a big net positive impact. But I would say it was not all hunky-dory. If you look at some of the reports during the second wave, 40% of Indian startups had a big challenge of cash crunch, huge challenge, right? A lot of them were dependent on bridge capital. A lot of them were dependent on their existing investors to have an extra powder ready. Some were raising funds with undervaluations just to keep themselves alive. And a lot of them actually had to shut shop, and they had no other option, especially in domains of travel and hospitality. It was a big challenge. One of the prominent noteworthy impacts that we saw was Airbnb, which announced IPO, had to go back and not execute the IPO immediately, because the moment shutdown happened in the US, the entire ecosystem was sort of shut for travel domain, and Airbnb had a big impact. And India was also in a similar zone. A lot of startups had a challenge. So overall for Uniphore per se, yes, it had a net positive impact on the business. What we did differently out of this, and perhaps something the audience can pick up as well, is that we immediately created war rooms within the organization, right? And across 4 different action items. One was to execute our existing customers and move them to a work from home scenario and ensure that they are live, they are operational, and they are working. So setting up new customers and execution of new customers and old customers was one of the war rooms that we really focused on. The second was to ensure that our people are safe. Our people are getting all the kind of support that they need. We set up a small extra fund to ensure that the people are being taken care of. The third obvious was the info security, because people were working from home, etc., and the systems, etc., had to be put in place. The war room was set up for that. And then, of course, the overall war room in terms of the cash position, the cash flow situation, and all of it from finance perspective. So overnight, it took us 3 days, overnight, nonstop work, set up those war rooms, each one of them actionized, which enabled us to tide through the first 4 or 5 months, which was really tough. After that, it became BAU, through which the organization really tided through.
Thanks, Ravi, for your thoughts on how to be resilient during a crisis and how to handle some of these black swan events. And really exciting to know that you guys came out really well. Clearly, that shows. Rahul, coming back to you from a pandemic perspective, what are some of the industries that you're seeing have been impacted positively, or what are some of the industries that you're seeing impacted negatively? And also, does it change your investment thesis in some way post-pandemic? Okay, I think.
Yeah, Rajesh. Yeah. I think like Ravi said, I think hospitality took the biggest hit. Mobility came in pretty close, but again, last 6 months we've seen some, very exciting announcements in mobility. EV kind of came out as an innovation by mobility companies during the pandemic, and now we're seeing multiple players actually launch large-scale EV manufactured, domestically manufactured two-wheelers. Three-wheeler, the delivery volumes went up so much that there was a very high demand for two-wheelers and three-wheelers. Again, there is impetus on keeping up with the demand by manufacturing locally. So that has, we believe, kickstarted the whole EV adoption cycle for India. And what has, of course, got a boost is, the sitting at home. Two behavioral changes happened according to us. One was that there was a much higher propensity to spend, and people were missing the shopping experience, and they more than made up for it through online shopping. So the variations of going beyond an Amazon and Flipkart and looking for items in different places again kickstarted a e-commerce boom where multiple types of e-commerce players came on the scene by offering multiple choices which are otherwise not available. So a long tail of e-commerce has come out, and in the same way, local kirana stores have adopted massively on digital selling. Everybody's offering their portfolio on WhatsApp. Of course, education companies from Kochi like Entry have done well. They've had students actually shifting from, a lot of the university type learning is now moved to cohort based learning. And also vernacular adoption of education has been a very strong theme, where we are seeing in, especially in Kerala, there's a lot of adoption for entrance exams and government exams, where, content is being consumed in order to write an exam or to pass a job interview. So education, of course, has been a complete night and day difference before and after the pandemic has settled in. And last but not the least, probably the biggest opportunity we've seen emerge is in Fintech. So we are currently adding 2 million new demat accounts every month in India. For the longest time, Indian total demat accounts were stuck at 20-25 million. And now we're growing at 10% a month. And so what has, again, been triggered by the stay at home is, some kind of a future view on how to plan their financial well-being. And the manifestation of this is either in going beyond leaving the money in the bank, looking at small ticket investments. So companies like Small Case have received a lot of following. A lot of investments are going in through the small case route. Companies like Grow have gone through a lot of user-based growth. JAR, which does digital savings. So there is a very strong impetus to fintech investments and savings is what we're seeing.
Sure. Thanks, Rahul, for sharing those. Srikant, one last question for you, sort of more future looking. For all the budding entrepreneurs or technologists out there, there's so many things that are changing today in terms of be it NFTs or blockchain. Well, blockchain is already old, but or even business models like Thrasio model, or there's so many things that are coming out today. What would be some of the themes that you think would be important in next few years, and what are some of the things that to keep an eye out for?
So actually, I'll answer it in two parts. The first part is with some humor. People actually keep on talking about metaverses and NFTs and all that. Fundamentally, if you look at yourself, you yourself live in a metaverse, which you define. And interesting enough, during the COVID times, this feeling has become stronger, which is what Rahul was kind of underscoring, that people want to plan better, they want to be part of something, some movement, etc., because they're sitting at home. Now, have you ever kind of considered things evolving in this context? The answer is yes, because if you look at AR, VR, you look at education, you look at media and entertainment, you look at, we have had YouTube for a while, but like there's going to be a whole different innovation happening in media and entertainment and gaming, right? It's going to actually kind of immerse you much more, and a lot of plays there. Like, for example, if I even talk about Uniphore can play a great role in terms of enabling, okay, voice-related gaming, voice-related commerce to a much more precision degree, right? We have Active.ai, which is talked about voice-based banking, right? But if you combine Active.ai with Uniphore and really come up with a true digital banking experience along with the Setu, for example, right? It will be brilliant. Those are some of the things I see changing. If you look at education, it will change. Content is one thing, but content will be actually created by the consumers. It's no longer going to be some prof like me sitting in a corner and writing a book, right? Which no one cares about. It's all about experience in the moment, all of these things coming together because we have enabling technologies. That's why it's so exciting. And India is a large market. While we talk about e-commerce and D2C brands evolving and a Thrasio-like thing where they say, okay, these three have momentum, so I shall bankroll them, right? Which is a logical thing for anyone to do from an investment standpoint. But it's a lot more than that. I think the way we live and the way what we'll be working on will be very, very different. Okay. And you and I can have this conversation 5 years from now, and some of these things will come true. I'm certain. You'll be sitting at home and making your own movie. You'll be sitting at home with a group of people and doing a few things which will impact the community. Call it your metaverse, call it your mini universe, whatever. So all these things are going to be useful. And anything that you create in that context is basically what is called an NFT, right? At a base level, an NFT, like for example, video content in YouTube can be considered an NFT because once you become a premier user of YouTube, you're consuming that. So how does that get regulated? How does that come back into mainstream society is something that the governments will have to change, will have to come up with reforms. They can't just say, I'm going to ban something, or I'm going to regulate something. It's not going to happen that way. So there's this huge sea change where what I call collective intelligence will come into play. And it will be led by a lot of good innovations which are already there. So I think that's where life will be. It might be some kind of a sci-fi movie, not there yet, but you'll be living it.
Thanks, Srikant. Really interesting to think about some of the possibilities. In the interest of time, I know I have a lot more questions for this panel, but I also want to play the recording that we did with Alok. So in the interest of time, again, I think, thank you very much, all of you. It's been a very, very interesting discussion. Like I said, I think each one of these conversations could be like, a lot more longer, right? It's been very, very exciting. Thank you very much for joining us today. And Rajesh, we I need. And so we can play the video with Alok. So this is the recording that we did with Alok. Yesterday, Alok from Policy Bazaar, he couldn't join us. So we did a pre-recording. So we wanted to make sure we had the time to do that as well. So, so Alok, good afternoon. So Alok, good afternoon. And first of all, congratulations on the successful IPO of Policy Bazaar. I mean, it's just an amazing achievement. And also thanks a lot for taking the time to talk to this panel or talk to this audience. We understand it's a really, packed time for you. So really thanks a lot for taking the time. See, in terms of the panel itself, as we briefly discussed yesterday, what we are trying to do is we're trying to sort of get an understanding of how the Indian startup ecosystem has evolved over the last 10 years broadly, and also talk about how the pandemic is impacted and what do we see going forward. That's kind of the broad topic discussion, right? And as a founder who co-founded the company in pre-2010 days when, access to funding was limited, and then subsequently raised a lot of 700 million plus or so funding, and then took the company to IPO. Would really love your thoughts on how the ecosystem has evolved over the last 10 years, as well as specifically for you guys, Alok.
Sure, Rajesh. So first of all, thank you very much for having me here and accommodating my request to do a recorded session. And I would love to be part of panel, but circumstances are a little tricky for me right now. But really glad that I'm able to do the recording part at least. So, one factual correction, the total money raised by the company till we were private was about $400 million.
Got it.
Touch wood, we had been decently efficient with our use of capital. So the total capital used before IPO was, $150 million ballpark for both Policy Bazaar and Paisa Bazaar combined. Wow. And so we had about $250 million in the bank when we went to the capital markets. And yes, we have raised another $500 million odd now as part of the public listing. But coming to specifically to your question, see, one very big change, which actually drives a lot of other things, is that when we started in 2008, 2009, in that period, it was still a risk that you were taking when you were trying to come out of a corporate and trying to do something on your own. Right. Personally, when I took that call, it was like, yes, if it doesn't work out, then maybe you let go of 1 or 2 or 3 years of experience on your CV. And if you have to go back to corporate, you will join with a much younger batch, or you'll have to let go of 1 or 2 promotions technically. So that has totally changed because the ecosystem has accepted the experience that a person gets in a startup as a very critical experience as part of the professional career. In fact, a lot of people I know are getting very good breaks in corporates because they have tried to build something, or they are part of a startup where obviously you're working with much more ambiguity. You are trying to do hundreds of things, a lot of time capital constraint. So that acceptance of a person being a founder or being part of the startup journey is definitely there in the ecosystem. What that has meant is that 3-4 things have also happened. One, from the consumer perspective, the acceptance of buying products from a startup or using a startup for whether it's a retail need or whether it's a corporate need is much higher. So, we always heard about the long tail of supply. Now that long tail actually starts to get the demand because people are accepting to go with those sort of brands or those sort of companies, which obviously helps because it not adds, adds constraint in terms of your market reach. Capital obviously is definitely much more available. When we started off, the number of VC fund we could talk to was something you can count on fingers compared to today where the seed rounds itself are very, very large, and the number of funds, angel investors, PE, interest, everything is at a very, very different level. I think India has one of the most vibrant capital market for the private investments right now. The
I think it's
very, yeah, and one last thing, linked to this actually is because there is an acceptance and because media has also overplayed a bit of romantic notion of being a startup or founder or entrepreneur. Hiring team has become much more easy compared to what it used to be.
got it.
So a lot of people are willing to take that call early in their career that they will be part of startup journey. Yes, because of capital, people are able to pay salaries which are market salaries today. Or in fact, some of the times you may find that startups are paying higher than what the market will pay. Plus, there is a charm of ESOPs. But all of this is combined to make India as a very, very vibrant startup community in last 1-2 years.
Absolutely. No, and I think, Alok, you made a very important point, because apart from access to capital and all of the regular factors, the acceptance is a very, very important factor, the social acceptance, right? And even in a smaller city like Kochi, we're seeing, everybody, I mean, there's a lot more acceptance to take that plunge, and that makes a big difference.
I'll give you an example, the way our Indian families work. If you're not part of a big corporate, to be a wastage to do one meeting when you travel from one city to another city. That's just not there. So the efficiency has gone up. I think a lot of that is going to stay. A lot of that is going to stay.
No, absolutely. I think a lot of things that we thought would never happen fully remote is now, I mean, just we are forced to do it, and we figured out ways to do it, right? I mean, it's just been amazing. Alok, one, this we have a lot of budding entrepreneurs who will be listening to this. So wanted to get, sort of one thought from you in terms of building a large scalable enterprise or fundraising or any of that, anything that they're endeavoring in something of scale, anything that comes to you as a piece of advice that they can take away.
So, actually 2-3 things, Rajesh. One, a lot of people get into a startup because they actually get into a romantic notion of what a startup is. So yes, you may have idea, you may be well placed in terms of taking a call of moving out of a corporate career into a early stage venture, or maybe just kick off something of your own. But the reality is that it's more about execution than the idea. And that execution in an unstructured environment is not as easy as it seems. You don't have to worry about basic stuff when you're working in a large corporate.
True.
But in a small setup, everything is your problem. Everything is your problem. Whether telephone is working, electricity is there, genset is working, everything, small things also is your problem. A lot of people have never dealt with, income tax, TDS, labor laws, PF departments, because that was not part of their role.
Gets taken care of.
Yeah. But again, once you are starting off, these are your problems. And these are not trivial in terms of the commitment or time that may take. You may get some advisors, but eventually buck stops with you. So be very prepared in terms of the execution it will demand. And, the ups and downs when a person goes through, specifically in the early stage, even though you may have some capital, is not something which everyone is mentally prepared when they start off. The highs are very high, but lows are very low. And sometimes it's not as easy to share those loads with anyone else. So you have to go through the journey on your own. So be prepared for that. Lastly, I would say a startup is all about contradictions. And there will be lots and lots of time you will have conflicting views. You can find examples of those conflicting views that this works, but the other situation also works. Whether it is about long-term decisions versus short-term decisions, efficiency versus effectiveness, when you're hiring loyalty versus competence, everything is a trade-off. And eventually, because in a startup, you are in a position to take a decision, that decision doesn't come easy. So you have to be prepared to live with your decisions. Eventually, you have to take decisions, right? So yeah, so these are the things that people need to keep in mind rather than just going by what media says, okay, that this company has done well, they've got this funding, they've got this valuation, the person has made so much money. Yeah, that's a byproduct. If it happens, very good. But if you can't enjoy the journey and if you can't thrive in unstructured environment, it's going to be tough.
Absolutely, Alok. I think very, very valid advice. I think when we were building our startup, the first office, which is the smallest, we put in so much effort that, you just realize, oh, there's so much you take for granted in corporate, right? That it happens, right? And it's there, but it's somebody else is taking care of it. Then you need
but
to
first
do all of that as well.
I mean, if there's excess rain, all the water can come inside the basement where our server room was. So we used to have these sandbags, and if there's rain, we'll all go to the main gate and put the sandbags ourselves. So, all sort of stuff has to be done because it's your baby, it's your company.
Alok, great discussion. Again, in the interest of time, I definitely wanted to spend a lot more time on this, and I know there's a lot more to share. So in the interest of time, I'll probably sign off now. But again, thank you very much, Alok, for spending the time with us in one of the, I would assume, one of the busiest parts of your schedule, and congratulations again on this amazing achievement. You made us all very proud. You're probably closer to a TiEcon now, but not, so amazing job, Alok.
Thanks, Rajesh, and all the very best for the event. And I wish all the people who are attending this event very best in their own ventures as well.
So we'll just wrap up with a couple of questions. I will try to make it quick. Srikant, one question, probably, hopefully you'd be able to help with this. How do you think the electronics hardware startup ecosystem in India would develop in comparison to China? Does Kochi or Kerala or other places in India have the potential to become electronics hardware hub of India? If not, what other city or what city in India could do well in terms of more from a hardware standpoint?
So very good question, Rajesh. Actually, as you speak, we are working with one of my old bosses called Ajay Chaudhary, who was one of the founders of HCL. Okay. There's an initiative called APAC, which they are doing, where they're going to actually set up indigenous manufacturing of ICs and processors all over again, because if you look at their DNA, it was originally hardware. So was Wipro. Till we kind of made a mistake from a policy perspective in the early 90s, where we said, okay, we'll just import everything. So I think that self-sufficiency, there are lots of measures that are happening. There's going to be some fabulous semiconductor initiatives being set up in Hyderabad. So I'm not able to kind of predict where exactly this is going to take place, but it's happening in Hyderabad. There are thought leaders who are getting together to kind of make sure there's enough funding. I'm not talking about small amounts of funding, because you can't do anything with even about $50 million or $100 million. You're talking about billions of dollars. And that kind of focus is going to be there. So I think we will actually establish a decent supply chain in certain segments, which is actually going to, again, fuel growth, as I told you, in a variety of areas like healthcare, manufacturing, education, agriculture, fintech. I mean, things that we were talking about, media and entertainment. So all of this, I think India is going to be very vibrant. The only thing which I underscore is the consistency of government policy and the continuity. Unfortunately, in India, there is no continuity between one government and the other. And I think that's where the thought leaders, political thought leaders, bureaucracy should step back and say, if something good was started by one regime, it has to be continued. And that's where we lose out all the time. China doesn't have a problem because they have only one regime. US has a great bipartisan system, right? Where they'll continue something good. Israel has a good bipartisan system. Whoever comes in will kind of pick up. we have this tendency of actually downplaying whatever is good and restarting stuff. Hopefully, if that changes, I think we will be there because there are enough plans and enough capital available now at the right size to get this thing to happen.
Sure. Thanks, Srikant, for that. And this question, there's one question that is coming from a budding entrepreneur. Ravi, I think you could probably help with that. How much time period is required for a startup to become self-sustainable, and what should be the viable effort towards that direction? And I think, you've been a services company for some time, you pivoted successfully, you had a long journey, but very, very successful journey. So maybe you could share some perspectives around this.
For a startup to become sustainable, it's difficult to generalize that. It depends on the business model that the startup is carrying. But I think I'll shed 2 or 3 points. One, if you are building something and thinking about a short-term exercise, then I don't think startup is made for that. You need to think long-term. If you think short-term, it's highly unlikely you'll be successful. There are only few and far in between. That's number one. Second, have a lot of perseverance. I think we are in an era where people are extremely impatient about almost everything in life in general. And that impatience causes a lot of challenges, heartburn, and overall impact personally and professionally to almost everyone. Perseverance can play a big role in that. Be persistent and just get hooked onto your idea and execute it. Third and final quick thing I would like to share is impatience is great in startup. It's extremely important. It's not a bad thing, but it has to be a good balance. I think it has to be a combination of impatience and extreme patience as well. When you talk about short-term goals, you got to be impatient about it. You need to ensure that you have a daily, stand up, etc., executed, and see those short-term goals are moving quarter on quarter, and you get there. At the same time, you got to be extremely patient about your long-term goals. If your long-term goal is to get to, let's say, a $10 million annual recurring revenue, then it takes time. It cannot happen overnight. And for that, you may need 2 years, you may need 3 years at times, you may need even 4 years. You never know what your situation around would be, what the global scenario would be. All of those things can play a major role externally as well. So you got to be patient about long-term goals, be extremely impatient about short-term goals. It's a combination of both that plays out. So I think those 2 or 3 quick points is what I would like to share. It's been a 14.5-year-old journey. So obviously we have been patient about a lot of things falling in place. But how long will it take for a startup to be sustainable? It depends on different business models. Are you B2B, B2C? What kind of market you are playing to? Are you playing for the middle-aged or middle-income group? Are you playing a higher income group, etc.? So it all depends on a lot of things. But
Sure.
Yeah, these would be some of my points.
Thank you, Ravi. Again, thank you, Ravi and Srikant. It's a great discussion. Thank you, everybody. We'll close this discussion now, and any other questions, please send out to us. Thank you.
Thank you, Rajesh. Thank you.